Hi guys, it's the Inspector here. Welcome back to the Mining Show. Today we've got 3 articles to go over. Let's get into the first one. The first one is Intel ships block scale ASIC chips to selected Bitcoin mining companies. So we talked about this the other day, and it was just going over how they're sending out their new ASIC chips to different blockchains, and we followed this tweet. It says here, it's official, Intel is part of the Bitcoin mining business. The gargantuan technology company announced its ultra low voltage energy efficient ASIC chips barely 6 months ago, and it's already here. Under normal circumstances, infrastructural support for a multinational company like Intel would be tremendous for the Bitcoin market. How it will react in the middle of all this chaos, we'll see it all react. The news didn't immediately do much, but the long-term effects remain to be seen. It just says here that there's a Twitter post on the Intel AXG custom compute team is now shipping the block scale ASIC. First product will always be unforgettable. It just goes on to congratulate the mining companies that have acquired this chip. It then says that notably absent from this list is Block, which is Jack Dorsey's former CEO of Twitter's company. Does that mean something is, or Block's just the fourth on the list? 3 months ago, Bitcoinist quoted Raj Kanuri emphatically saying, "Our blockchain accelerator will ship later this year. We are engaged directly with customers that share our stability goals. Argo Blockchain, Block, formerly known as Square, and Grid Infrastructure are among the first customers for this upcoming product." It says here that the green mine company Hive was the first to react. They tweeted, "Hive is proud to be partnered with Intel and can't wait to put the new ASICs to good use, mining Bitcoin obviously." A few months ago, the company was more eloquent in a press release, and they quoted saying, "These miners are expected to be delivered over a period of 1 year starting from the second half of the calendar of 2022. So obviously we're in that, maybe the third half now. The effect of which are all installed would be an expected increase of up to 95% in our aggregate Bitcoin mining hash rate from 1.9 exahash per second. Now if you didn't know the Bitcoin market, well, the Bitcoin mining hash rate works on exahash, so I think it's way above petahash and terahash and all that. But 1.9 exahash per second is a lot, and it's very quick. It then goes on to say, for their part, the Argo also went to the simple route and tweeted, "Thanks to the Intel team, we're expecting to be innovating with these new ASIC chips in our custom immersion mining rigs." So basically they're putting it in a immersion cooling, where you get a liquid that doesn't conduct electricity but conducts heat. So they've obviously got their immersion mining rigs, and they're pretty much more efficient than normal mining rigs because of the temperatures. And then they're quoted as saying, "Today we at Intel are declaring our intent to contribute to the development of the blockchain technologies with a roadmap of energy efficient accelerators. Intel will engage and promote an open and secure blockchain ecosystem and will help advance this technology in a responsible and sustainable way." Lastly, it says that in the eyes of the mainstream media, Bitcoin or anything related to it can't do anything right, and this bear market of sorts all gives to look the perfect ammunition to attack the technology and the billion-dollar market around it. Luckily, Bitcoin doesn't care. In the first mainstream article about Intel shipping its block-scale ASIC chips ahead of time, it goes on to say that the block-scale is shipping a couple days ahead of Intel's previously stated release window for the third quarter, which begins Friday. Even if it's a tiny head start, it's nonetheless an achievement for a corporation that is becoming notoriously under schedule across multiple products, including the Sapphire Rapid server and the discrete Arc GPUs. So Intel do have their own line of GPUs coming out, which will be for obviously gaming, or they could be good for mining. But we don't know what the actual specs are on them yet, so we're going to have to wait until they actually further release information about it, or some leaks come out about it. These are the Arc GPUs, and when they do come out, I'll try get one and try test it on mining, test it for different coins, and see if it's any good. So yeah, this new mainstream, companies, Intel, Nvidia, all of these companies, if they get involved in this Bitcoin mining, it's better for us because we then have people that are willing to make more efficient chips, and this gives us better hash rates and lower energy costs. So Bitcoin mining can remain at a low cost in terms of energy and still produce profits, because the ASICs right now are obviously in low profits because of the electricity and the Bitcoin price. But if we have more efficient chips that are in ASICs, we can get more hash rates and more profitability. So obviously over the years we've had different variations of ASICs, and with each one getting better and better. So hopefully this one's better than the last one, and we can continue to improve this technology and build upon it and get better profitability out of these ASICs and make them cheaper. So the second article is the Bitcoin miner revenue surpass Ethereum, but there's more. Bitcoin miners in the lead. Data shows that Bitcoin miners have been recovering compared to the ETH counterparts. This has been apparent with the closing hole of the final number of months to place. The Ethereum miners had barely managed to remain forward. This is able to proceed till the next month of June, an unsure month of who's concerned in the cryptocurrencies, and this by extension has affected the profitability of ETH mining as a result of the decline in value. For the final month, the whole quantity generated by Bitcoin miners had come to around 600 million, whereas Ethereum numbers had been a compete of 550 million for a similar time interval. This reveals that Bitcoin mining has surpassed the Ethereum counterparts by greater than 100 million in the month of June. This was surprising growth, provided that Ethereum revenues have truly been forward of Bitcoin about 100 million for the earlier month, and bigger margins had been recorded for the months earlier than that. So the change has flipped the mining profitability expectations on its head. I'm not going to go over the rest of the article, you can check it out in the link in the description. I just want to focus on this chart that we have. So the most of it we have, we have the January to like kind of December time, we have a peak there, and then we have a peak of November to September in 2021. Realistically, I think that the mining cost for Ethereum miners is becoming lower, and that's why we've seen this flip, obviously because the decline in price of Ethereum and Bitcoin, but ASIC chips are way more efficient than GPUs, so people will be taking GPUs off the market and therefore won't be mining as much, and this is why we've seen this flip, that Bitcoin has become the most profitable, the most mined coin out there. It says that there's a difference of 100 million for the month of June, and I want to see the figures that come out of the next month, so July, because we could see an even bigger increase as people were taking their GPUs off the market. Or we could see a slightly close of the gap because people are getting back onto the network due to the Grey Glacier update. So far we haven't seen much hash rate actually hit the network, but we could see it in the coming weeks. If that doesn't happen though, I think the gap between Bitcoin and Ethereum profit and revenue will become larger. Obviously because of the 16-second block times, this has gone down as well. So we could see that the 13-second block times changes this number, because we're effectively taking away about 5% of the profits because of the block times going down, so there's less profits to go around. But now that it's returned to 13 seconds, we might see this close the gap as well. And lastly, we have the Coinbase says miners' sales of newly minted Bitcoins don't add significant market pressure. So I've always thought that in the markets, the Bitcoin miners do control significant price changes. However, this article kind of disproves that, I guess. So it says here that a common concern during the cyclical downturns of Bitcoin mining is the extent to which miners are selling their Bitcoin holdings, crypto exchange Coinbase said in a research report last week. In times of market upheaval and fall in Bitcoin price, margins compress across the board and force more miners to become net sellers, and given the price drop and the resulting loss of profitability, the financial environment for the mining industry has shifted materially since last year, and raising capital in the public markets has become very difficult. Still, even if all newly issued Bitcoin were immediately sold onto the market each day, that would equal only 900 of selling pressure, which represents about 1 to 1.5% of the total daily volume it added. A healthier Bitcoin derivative market should allow miners more options in terms of potential hedging strategies, the report added. Mining companies that expanded aggressively in the recent years and leveraged their balance sheet in the process are now being forced to restructure their operations. The note said that these conditions should present opportunities for consolidation across the mining industry in the second half of the year as less prudent miners continue to face challenges. While the mining market still may be far from equilibrium hash rate, miners' selling and shuttering of activities in recent months has resulted in a falling network hash rate and ultimately mining difficulty. And once these trends flatten, it could be the signal to start borrowing process based on the similar trends observed in the 2018 crypto winter. So in 2018, basically, that was their plan. We're going to buy up all of these machines. It was in the later half of 2018. We're going to buy up all these mining machines, all these ASICs, GPUs, all of that across the board. And they're going to basically say in a couple of years, this is going to be how much Bitcoin we're going to be mining. And they leverage that number to get more loans to buy more mining equipment. And it keeps going up like that. And obviously with this downturn of the market, we've seen that a lot of them can't sustain the debt that they've had, and they need to start paying it off. So they're basically liquidating every day all of their Bitcoin from mining and paying off their debts. I think in the next couple of months will be the right time to buy any GPUs or ASIC miners. We've seen GPU prices crashing, we've seen ASIC miners crashing as well to a relatively good price. They used to be at around 40,000 per ASIC. Now it's around 10,000, 20,000 per ASIC, depending on where you buy it from. And this is just because the market conditions allow them to be selling the ASICs at that price. Obviously, we know that this inflation of the GPU and ASIC prices is due to the price of the coins. GPU prices are down to even around MSRP, below that, if you really want to get one on the second-hand market. So right now is the time where you choose if you want to actually think about the future. You choose to buy all these ASICs and equipment for mining now, and in the future it should pay off in the fact that we'll have cheaper equipment. You won't have to buy as much stuff because you've already got it all, and the profitability will be there for you. Also focusing on electric costs, I've seen a lot of crypto YouTubers actually building solar mining farms. So they're just setting up solar panels in their back garden, or they're setting up a solar panel kind of like shed where they have solar panels on top of a building, and they're just using that to mine. This is a really efficient way of mining because obviously you don't have to pay for electricity. It might take a lot of solar panels to actually power a ASIC, but if it comes to GPU mining, I don't think it will take that many solar panels, maybe 3 or 4, depending on what size you get them in, to power a GPU rig. So a lot of people should be getting into this GPU or ASIC market now because we're at low prices. They could dip even further in the next coming months. I don't think it'll be much variation between what it is now. Also, if you're looking into getting better electricity and efficiency, I would look into buying solar panels for the next coming months, because when Ethereum goes to proof of stake, it's all about energy cost and efficiency. And if you have solar panels, that's basically free energy, and you can mine whatever coin you want and still make profits. So that's it for the video. If you did enjoy, please like and subscribe, and all the articles will be linked in the description below.